charts, no graphs, barely any data. This month's market update, it will be quick, to the point, yet full of everything you need to know right now about the greater Calgary real estate market. Let's start off by talking about the elephant in the room, interest rates. Yes, in their infinite wisdom, the Bank of Canada has once again increased its overnight lending rate by another 50 basis points. So in English, this means that for the typical Calgary homebuyer purchasing an average benchmark priced home of $525,000, it will now cost them the price of a Starbucks latte more per day to own their next property. So well, it isn't the end of the world, but it is an additional $160 or so per month, which will adjust some people's buying power as a result. Something none of us want to continue seeing unnecessarily. And this now opens up the question, will this continue to happen? Will we see another bump? Right now, it seems there are just as many camps suggesting, yes, another increase is needed, as there are saying that it's time to pause now and allow the consumer price index to show in the months to come how much these increases have truly dropped it, in essence, curbing the inflation in Canada. This remains to be determined. Stick with us and we will continue to report on this as it unfolds. Okay, let's shift gears to the real estate results from the month of October. We will talk about the sales summary, the inventory story, and the pricing picture. So starting now with sales. Here's the deal. Sales are down, no question. When we compare to last year in October, our real estate board reports that we're down 15% in total sales. This amount of change, well, it could be cause for concern without proper context. So let me give it to you. Last year was the absolute highest month of sales ever in October. It equated to a full 35% higher than long-term averages. It was a whopper of a month last year. So when we extrapolate things a bit deeper, despite being down that 15% from last year, we still find ourselves up 15% ahead of long-term averages. So this is the case where context really helps us tell that true sales story. Now, one thing to note here is that this is a tale of two sales markets, this detached and the semi-detached market, and then the apartments and the row home market. See, sales for detached and semis have had the largest decline in numbers, with about a 30% pullback from last year, while rows and apartments are continuing to sell significantly more than last year, 18 and 20% respectively. The pace for which apartment and rows are selling right now are above levels we've ever had in our history for this time of year. So hang on tight if you are in those markets to buy or sell. And one more thing for which I feel is equally important to note, as a city, sales month to month have barely adjusted at all. Despite the pessimism out there, the again recent rate climbs, and the pending recession, we have yet to see any kind of seasonal slowdown. I think when we look at the numbers, we sold about 40 homes less in total than in September. That's absolutely negligible. So to sum up sales with two things remain positive on the demand front, i.e., well, people want to buy homes. And then I'll follow it up with it depends. See, property type and price range details are required for you to make the most educated decision for your family's buying and selling needs. So be sure to get this from your trusted real estate advisor, because we can't go into it all here in this update. All right, now let's transition over to the inventory story, or in other words, well, the total homes for sale out there. While sales is a tale of two stories, inventory has one major story. Inventory remains down across the board. We are seeing that the amount of new listings coming to market is equal to or considerably lower than last year. So as a result of our sales continuing to maintain steam, and this new listings coming to market continuing to lag, we end up with a market where the total amount of available homes to purchase is becoming extremely low. All right, right now, as we record this video, we have a record low amount of available properties to buy for any October in our history. This combines to a 20% reduction from last year and a 31% lower number than our long-term averages. That's a big drop. But now it's not even across the board. The lower the price point of home, the less inventory we have, making the below average price points highly competitive right now. Let me explain this a bit further before talking about pricing. See, we determine the pace of the market a few ways. And one of them is the ratio of sales within a given month to new listings that come to market. Now, like I've said before, The higher the ratio here, the faster and the tighter the market. Citywide, right now, we're at 85%. This is nearly equivalent to our peak months of this year. See, detached, semis, and apartments, they sit right at about 83%. But our row housing market, rows are at 106. This means there are more sales happening than new listings coming to market. In essence, depleting the amount of homes to view each and every day in that segment. So either way you shake this, today remains a high buyer demand market. Further to drive this point home, I did make one graph, so maybe I did lie just a little bit. Not only are the different property types acting differently, but among the price ranges, it is too. As you look at this months of supply versus price range graph, you'll see a few things. Months of supply meaning if we stop listing any homes, how long would it take to just sell everything we have? The lower the number, the tighter, the more competitive the market. You'll see here on the graph that everything under 600,000 sits under 2 months of supply. And then as prices climb, it goes up to about 4 months for those homes above 1 million. So 2 months is seller's market territory, i.e. in the favor of the seller. 4 months, well, this is in buyer's market territory, favor of the buyer. So as much as I wanted to make things as simple as I could, because the market is acting differently among the various segments, it does take just a wee bit of explaining to get my full point across. Okay, let's finish up with the pricing picture now. So for the astute numbers guy or gal, it's likely you can sniff out where the market data is going to point, because our pricing always follows the supply-demand fundamentals out there. So with sales staying steady, with active homes on the market dropping, the positive pressure remains in our greater Calgary marketplace. See, when this happens, it provides us with stability in our pricing, which simply means, once again, there's no crash happening here. Now, as a whole, month over month, we saw a 3,500 downward adjustment in our benchmark price. This is across all of October's sales versus September's. That's insignificant and negligible once again. Now, looking further back, we have only adjusted 4 full % from that mid-frenzies peak back in March and April. That's not even 20K. This is in vast contrast to the other Canadian markets of Toronto and Vancouver, where they are seeing pricing slide in the hundreds of thousands of dollars, and in some cases, all the way back to pre-COVID pricing, erasing 2 years of hyper price growth. Why are they dropping like a rock? And why are we floating like a boat? Well, it's for a few reasons. They hyper grew for years and years and years. It was overinflated, fueled by things other than economic fundamentals. And now they're paying the price. We did not see virtually any growth. We slowly crept out of our dismal half decade off the backs of true economic fundamentals, driven by supply and demand, not speculation in our market. Now, Calgarians, we're not immune to the recessionary times coming to Canada, but our real estate is battle tested and ready to battle it among the best in North America. Even the naysayers now are saying we will come out of this, well, just fine. So do I have some advice for you right now? Well, heck yeah, I do. There's absolutely no reason to delay your life plans as a result of concern for our Calgary real estate. Not at all. If you need to buy, do it. If you can afford it and want to buy, do it. If you want to invest, well, invest proudly in Greater Calgary. If you need to sell, well, feel confident the market is there looking out for you. And if you need to tighten up your personal balance sheet and worry of the recession and economic uncertainty in your personal situation, you will have no problem making the necessary real estate adjustments to better serve your family's needs. So with all the panic out there, don't let real estate be the thing that concerns you. Not here. Well, with that, as always, thanks for watching. I hope this has helped, and if you need more granular or specific advice for your scenario, please don't hesitate to reach out to us at Redline Real Broker. We've got an army of specialists for each and every niche of real estate you could imagine. See you again next month. And P.S., if you want to subscribe to our monthly newsletter, the link is down in the description. So this is Darren once again, signing off.